Hi, everybody. Welcome back to another episode of Limelight Alpha's Talking Stocks. It's Todd here today. No, Joe. Just doing some earnings reactions. They're coming fast and furious this week. A lot of interesting companies, many of which I own. So I wanted to sort of dive in and just get myself updated to take a look and see how the earnings look and whether or not I still feel confident in some of these positions that, like I said, I have in my portfolio. So I wanted to do right now MongoDB, and the symbol there is MDB. They reported their earnings for their first quarter. And I want to take a look and see how those match up. Now, let's start off, I guess, we'll share my screen and let's take a look at how they're doing today. So you can see they're up 10% as of the time that I'm recording this at 1 p.m. on Friday. That's a pretty good move. You see a lot of that, though, was right at the very beginning of the day. We rallied up sharply to the highs, and we've sort of been trending back down a little bit lower. You can see that I do own MDB. It's my best performing stock on the day, up 10.3%. And overall, I'm up 84% on the stock because I have indeed owned it for a while. So I like to start these earnings recaps or reaction videos just by going back to the 10K, which you can get on the company's website. So you just Google the company's name, in this case, MongoDB plus investors. And there'll be a section on that investors portal that allows you to get to the SEC filings, including this 10K report. And what I like to do is I like to scroll down and just refresh myself on the business that they're in. So MongoDB is a database service provider. So they allow you to basically create a database in the cloud, and they charge a subscription fee to that, known as software as a service. So you pay based upon usage. You don't have it deployed necessarily in your enterprise. You have it deployed in the cloud, and they collect a monthly subscription fee rather than just say an upfront flat fee. Kind of like think of the olden days with software, you had to pay like $50 every year to get the latest TurboTax update. This is just updated continuously, and you pay a fee for that to have access to it. So again, a robust platform enables developers to build and modernize applications. The big argument here is that, relational databases that were created back in the 1970s, 1980s, they're really hard to work with. They're the way that they're very structured databases, they're not as flexible. And because of the structure of them, it's harder for developers to create things that work very quickly. And since they weren't designed for, say, today's access to information and that free flow of information, just how much data we are crunching and trying to interpret, the whole idea here was to create something that kind of took, okay, a relational database has some pluses to it, but speed is not one of them necessarily. Flexibility is not one of them. The ability to easily, develop applications that interact with the data isn't necessarily one of them. So MongoDB came out with a solution that kind of blends the best of relationships, or takes relational databases into the 21st century by creating, I guess, a universe that's accessible and more easily digested. And they mentioned developers a lot in this 10K one. I think that there is probably some coding that you want to be able to do. It's kind of like for the people who are hired by companies, like developers that are hired by companies to kind of create these sort of applications based upon these databases. This is really seems to be who they are targeting. They say that the database market is pretty big. And, one of the things that I always like to try and see is, just how much running room might they have. And I usually, there's a number of different ways that you can do that. You can type in market size, anything like that. Just do like a Control F. I happen to know that their projection is that this market is going to grow to 106 billion by 2024. So I just typed in, for our purposes of speed, 106, and that got us to this part of their 10K one. And you can see, according to IDC, which is a really well-known market research company, the database management software market is worth 68 billion currently today, and it's growing to 106 billion in 2024, or 12% compound annual growth from now through 2024. So $68 billion market growing to $106 billion market with a double-digit compound annual growth. So the argument that I would make here is that Okay, MongoDB disrupting the old legacy database providers, things like Oracle, IBM, and Microsoft, with something that's more modern in a market that's growing double digits. So if they're executing well, then they should be growing much more, much quicker than the market, especially if they're displacing these legacy providers. So we're going to want to watch for that in the earnings to see, are they growing faster than this 12% compound annual rate? So let's go ahead and now swap over to, I like to use Seeking Alpha for this because they put all the information in one spot for me and I can just dive through. No, I am not compensated by Seeking Alpha for mentioning it on the podcast. It just happens to be where I like to access the information. So you can see that if you scroll down here, they have their earnings call transcript. We'll get to that in a second. You can see it says it rises after Q1 beats. We already looked at that and we know that the company is up 10% on the day, but we didn't know that it beat. So let's click on this and see what it says. So it says MongoDB non-GAAP EPS was a loss, 15 cents per share, but that was 21 cents better than expected. And on a GAAP or a generally accepted accounting principles basis, they lost $1.04, and that was a 19-cent beat. I usually look at non-GAAP EPS because it backs out a lot of one-time stuff that like stock-based compensation for management, that type of thing. I like to get a better view of how the organization is working on an operating basis, and I think that this gives me a little bit more clarity into that. So revenue was 182 million, and that was up 39% year over year. And that was a beat by 11.6 million. So again, going back, market is growing, what do we say, 12% annually, according to IDC. And their revenue was up 39% year over year. Got to like that, a tripling. Gross profit was 127 million. So obviously there were operating lines that brought them down to a loss. And then Q2 revenue consensus was 181 million. So let's go over my charting service. I use MarketSmith because it likes to put together all the information in a nice, easy way for me to take a look at not only the technicals to try and figure out my entries and exits, but it also has some fundamental data here that I like to look at. So you can see here in this April quarter that just ended, sales were up 39%. And you can also see that that's been pretty consistent throughout the entire COVID period. So even with the reopening, it seems like we're still tracking in the same 39% area. And the reason that I think that's important is that you have kind of like a lot of these software as a service companies, there's this thinking that a lot of demand for them was pulled forward because of COVID and remote work. That may or may not be the case with a company like MongoDB. And it looks like you have reached some degree of revenue stability here in the high 30% range. If you look at the quarter ending July, which is going to be the quarter that they just offered that guidance for, last year they did 138 million. So their guidance is for 181 million. So that's pretty darn good. So you're talking about 50 million increase on 138 million base. So that's good. Still going to lose money though. They're still saying that they're going to lose some money. So let's look at the press release a little bit more closely and see what they're saying in their press release. Over 26,800 customers. So, in a global marketplace, that's pretty good. Solid penetration. Does make you wonder at what point over time are they mature and are into these places. But there's a lot, once you're into enterprises, there's a lot of opportunities for you to grow within those as other people from other departments begin using the service or whatever. So we'll get to more of that in a second when we look at net revenue retention rates. But just so you know, 26,800 customers. Atlas revenue was up 73% year over year. I think historically that's accounted for somewhere, I want to say 45% of sales. And now it's 51% of sales. So Atlas revenue continues to become a greater share of revenue. That's interesting. So MongoDB, they also have the enterprise business, and then they have a services business. So usually it had been Atlas and the enterprise were kind of split, evenly in the mid 40s, and then service making up the rest. So MongoDB delivered an excellent start to fiscal 22, 73% growth in Atlas, 5 years ago, we launched Atlas with the idea customers would value a fully managed MongoDB database as a service offering. And that's why we built MongoDB. So as a reminder, MongoDB has a freemium approach. So you can actually go to MongoDB's website and download a free database that you can kind of play around with. It's MongoDB Atlas is kind of the paid service of that, where, okay, now I don't have to worry about, provisioning and all of the nonsense that's associated with me managing the database myself. I can just simply feed information to the database, and somebody else is going to make sure that that's all the hardware is working and all the stuff is going on. And obviously that's been a pretty successful launch for them, given that now it accounts for greater than 50% of revenue. So they say it's nearly a 400 million revenue run rate business, and now represents the majority of the revenue for the very first time. So that's a plus. But remember, as we talked about when I did the Lululemon, and you can just go back in our history and see the earnings reaction that I did to Lululemon's report. Whenever you're reading these press releases, you've got to read them with a little bit of a grain of salt, because, like anything else, they're putting their best foot forward. They're not going to, advertise at the top of the press release all the things that are going wrong for the company. So just, read it and understand, okay, they're happy and they're pleased with what's going on, but, they're also talking up their own book, if you will. All right, so revenue was up 39%, which we established. Subscription revenue was 174 million of that, up 40% year over year, and services revenue was 7 million, up 29%. So services really isn't a very big part of this story for MongoDB. It is for other companies, but not really for MongoDB. It's only 7 million of the 182 million. So that's good to know as well. Loss of operations was 61.4 million compared to 42 million a year ago. So they lost more than they did a year ago. That's not necessarily what we want to see. We want to see, as companies get bigger and revenue is growing, we want to be able to see them leverage that growth against their fixed costs for operating margin expansion. And as operating margins expand, then you should, in theory, get to that profitability. So I always, with my investments, I like to say that, okay, is there a pathway to profitability if they're losing money today? I think there is one here, but again, we're going to want to keep our eye on this, because as a company is growing, we would prefer to see the loss from operations shrinking, not increasing. Net loss was 64 million, or $1.04, compared to 54 million last year. So again, same thing. Cash flow, 935 million in cash equivalents to short-term investments. Yeah, we don't have to worry about this company going out of business anytime soon. 10 million in cash operations, that's good. And cash flow will increase as they get more subscribers, so that's good. And then they just sort of talk about all of their success and how they've won a whole bunch of people, new accounts. Talk about the guidance here. Full year fiscal 2022, 771. What I like to do when I see a full fiscal year guidance is I like to just take the current year and annualize it and see whether or not it's back-end loaded or not. It helps me feel if there's seasonality to the business. So in the quarter they just reported, they did 181 million. So back of the napkin math, that's 360 million every 6 months times 2 for a full year is 720 million. And they're looking at doing 771. So the assumption is that you will see some amount of sequential growth from the current pace that they're operating at. But again, full year, they're looking at losses of as much as $1.38 per share. So that's interesting as well. Okay, let's go back here and take a look at the earnings conference call transcript and pull that up and see if there's anything that jumps out to us there. Remember, they said $106 billion market opportunity. And if you think about that guidance that they were just operating and the fact that this is less than $1 billion a year revenue company, theoretically, there is a lot of running room ahead. So there will be some pauses in my conversation here as I just sort of glance through some of these numbers. So if you hear me go silent for a minute or 30 seconds, don't worry, I'm still here. I'm just looking at some of these figures to see what the story is. So again, they're talking about Atlas being a big growing part of their business and now becoming the majority of their business. And of course, just talking up a lot of you can scan through some of this. I recommend reading the transcripts every quarter. We won't read the whole thing aloud, but I think that after the episode is done, and if you're interested in MongoDB, you'll want to do that. So you can go through. So just going back to IDC's projection, they had said that it was going to grow to 106 billion by 24. They say in 2021, IDC is projecting the market to be 73 billion. And again, MongoDB just accounting for less than $1 billion of that. There's been 175 million cumulative downloads of its software, 70 million of which in the last 12 months. So obviously a lot of interest. And again, when you're talking about a freemium model, you want to see engagement, because the idea is that, okay, if it's a freemium, people are going to get it. They're going to play around with it. They're going to like it. And if they like it, they might subscribe to Atlas. One of the things that I want to see in here and I want to get interested in, of course, they work with all the major hosting providers, as they say, AWS, et cetera. So if your data is in a particular cloud, you should be able to use this regardless of what cloud platform you happen to be having host all your information. One of the things I do want to see on here, and they're just giving some examples here of how different companies are using it. Now we're getting into the meat of it, because now the chief financial officer is talking about it. I want to see, if you look at retail, and again with the Lululemon, we talked about same store sales or comp sales growth. In software as a service, they also will release what is similar to, say, same store sales. So sales at a store 1 year versus sales the prior year. And in the case of software companies, they usually referred as the net revenue retention rate, annualized revenue retention rate, some kind of a rate like that. And what they're trying to say is, okay, at customers that have been with us a year, are they spending more or not? All right, just going through here. So they added 2,000 customers sequentially. So that number of 26,800 was 24,800 or less. And in the last year alone, they've gone from 18,400 to 26,800 customers. That's really interesting. And they're just talking that 3,300 are direct sales customers versus 2,200 in the year ago period. That's important because you're not having to give up some of that revenue to a third party. All right, here we go. Net expansion rate above 120%. That's what we want to see. So, existing customers are spending 20% more than they were a year ago. That's on a net level. So they'll lose some customers. They add some other customers, and some will grow and some will shrink. But on a net basis, 120%. That's pretty good. And they finished the quarter with 1,057 customers doing at least $100,000 in annual recurring revenue. Gross margin is 72%, down 1% from a year ago, 73% last year. Gross margins above 70% is what you'd expect to see. Would be good for software companies. That's nice and solid. So then it was a negative 5% operating margin in the first quarter and a negative 6% margin in the year ago period. 9.5 million loss, 7.3 million a year ago. So they are making some headway on operating margin, but they're not making as much headway as quick as revenue growth. And that's why in dollar terms, the loss increased despite the fact that their operating margin actually saw a little bit of an improvement. And they do have a positive operating cash flow of 10 million in the quarter. And that's an improvement from negative free cash flow in 2021. So 8.4 million of free cash flow in the quarter, negative free cash flow in the prior year of 8.5 million. And that again would lead me to believe, okay, there's an opportunity for this company to become profitable over time. There's that pathway to profitability, which I would feel good about. And then now we're shifting over into the transcript, and they're talking a lot about the forward guidance, and that's kind of the end of that. So, I mean, if we go back and we just say, okay, it's up 10%, we understand why. A lot of people have been walking away from these SaaS stocks, software as a service stocks, and thinking that 2020 was and pulled forward a lot of demand, and maybe they might not have as great a year in 2021. MongoDB maybe is telling you that that's not the case, that they can perform just as well in a post-COVID as they did during the COVID and in the pre-COVID. So we're happy with that. Not as happy with the fact that the total loss is worsening versus a year ago, but there are some glimmers, some signs of hope with an improving operating margin on every dollar of revenue. So that's a positive. And again, we're talking about a company with I feel pretty good about the running room that they have to that $106 billion, 12% compounded annual growth market. Here they are growing 3 times that level in the first quarter. So I as long as we're continue to grow at a rapid rate like this, I'm going to stick with my shares, and I feel pretty good about it. Thanks again. We'll talk to you soon.